How much money do you get to keep when you sell your house? What are the closing costs? What's a seller's net sheet? Sounds interesting? Then keep watching. Hey everyone, let's face it. All we hear about as sellers is how much money we get to keep after we sell our property. Let's walk through a seller's net sheet, which is the tool that we use to determine our closing costs and our profit. Starting at the top of the net seller sheet, you'll see market list price, and there's two different numbers here. One is 300,000 and the other one is 315. And the reason for this is because we're projecting best and worst case scenario based on fair market value. So for our example, these are the numbers that I've chosen. Moving further down, we get to the expenses, starting with first mortgage. For our example, I've used $200,000, which is what we owe on the property. Moving further down, we're looking at property tax prorations, and if you're in a state like Illinois where you pay last year's taxes this year, you have to account for that. So here I've used, and this is, again, all of these numbers are, I'm making them up, right? None of these numbers are 100% accurate about anything. So we said our taxes are $5,000 a year. We have to account for all of 2019, which is 12 months. And let's say we know we're closing on our house next month in October, so we have to account for 10 months of that $5,000 for this year. So that is why you see 10 months under 2020. Further down, you get to the brokerage commission, and you'll see 2.5% and 2.5% for a total of 5% commission. Obviously, this is split between the listing office and the office that brings a buyer. Next, we have title insurance of an average cost of about $1,600. Then the next three lines, you'll see state, county, and city stamps. The city that I've chosen does not have city stamps, so all we're accounting for is for state and county. And you'll have to figure out, of course, how much you pay per thousand. In this case, it's $1 per $1,000 for state stamps and 50 cents per $1,000 in county revenue stamps. And then obviously you get the total expense when you do the math. After that, you look at your lawyer fees. And that's an average cost of about $500. Then you look at the recording fees of about $50. And of course, you have to pay for a survey for the boundaries of your land, which runs about $350. And there's a few miscellaneous expenses that may or may not apply when it comes to your property. So when you add everything up, we're looking at total projected expenses at $227 and change. Under the first scenario, and at about $228 and change under the second scenario. And we go through all the math, we're left with $72 and change under scenario 1 and $86 and change under scenario 2. So you can very clearly see how there's about 9% of closing costs in addition to whatever you own on your property. So keep that in mind. I think sticking with 9 or 10% projected closing costs is a fairly solid number, just to give you an idea of what you may have to pay at the closing table. Now, that being said, let me state this, okay? Because I want to make sure that these are just projections. These are estimates, right? These figures are only approximations. They're not actual closing figures. And they're subject to change at any time and should only be used as a rough guide. So if you really want concrete numbers down to the last penny, you should definitely contact your mortgage consultant or your real estate attorney. I hope you found today's information valuable and beneficial. And if you did, please hit like and subscribe. If you have any questions, comments, and suggestions, don't hesitate to reach out. And I'll see you all next time.